What's going on, boys and girls? Welcome back to FEEKI Flips, the most dumbed down real estate channel on all of YouTube, because if I can make money doing this, then so can you. We're back with another question of the week episode, so if you're new here, make sure to hit that subscribe button, stay up to date with all the content we're dropping, whether it's the question of the week or the more vlog style episodes where we're showcasing each of our projects in various stages. And make sure to smash that like button for us, help us out with the YouTube algorithm, and make sure that this content spreads to other people that are interested in real estate and real estate investing. Today's question of the week comes from Grant Tolman, and to hop right in, the question is, what are some of the ways that you can convince people to sell their house at under market value? Now, this is a really easy question to answer, and the answer is you can't. Thank you for coming to my TED Talk. But really, this is an awesome question. I'm excited to answer it because this was one of my questions when I first started getting into this, when I first started learning about wholesaling, before I had ever done a deal. You know, you learn about this stuff online and you hear about these guys, you know, they get a property under contract for $200,000 and it's worth $250 as is, and it's going to be worth $300 when it's fixed up. And to me, I was like, okay, that's all well and good. Like, I understand how it works, but who in their right mind would sell their house for $200,000 when it's worth $250,000? Like, something's not right here. So let's hop right in. Now, when you guys are learning about this online, or whoever's teaching you how to do this, you probably keep coming across the buzzword motivated seller. And there's an emphasis on the motivated. The person has to be motivated to sell their house at under market value. On every single deal that I've ever done, whether it's wholesaling or flipping, rentals, development, the seller is motivated in at least one way, and sometimes two or three. So throughout doing all of these deals, what I've found is that motivation is usually broken up into three categories. First, the house is really messed up, like not just a paint and carpet type situation, but the house is in need of a full remodel and some major repairs. Sometimes we can get away with a paint and carpet situation, but we'll get into that in just a little bit. Number two, the seller is really messed up, whether it's personally, financially, they're in some sort of situation that is not normal. Number three, and this is the most common one, both number one and number two combined. The house is really messed up and the seller's in a really messed up situation. So to go through those three categories really quick, the first one is pretty self-explanatory, that the house is really messed up. I mean, a lot of times you can see this from the outside. Sometimes it looks okay from the outside, but the inside is really messed up. These are just houses that haven't been taken care of. They could be super old and they've never been updated, or they were updated and for whatever reason, you know, there's holes in the wall, there's tons of trash, anything like that. That's the stuff that we're looking for, and those properties are way more likely to sell to an off-market cash investor than to taking them on the market to get top dollar for. Number two, the seller is really messed up. So this can be a variety of different motivators. Stuff that we see a lot is divorce, where, you know, the couple has split and they need to sell the house quick, and there's a lot of pain attached to the situation where they really just don't want to deal with it anymore, and they'll sell it at a discount just to be done with the situation. And that theme carries over to a lot of other motivators as well. Some of the other ones that we see is like a spouse has died, and you know, these people have lived in this house together for 30 years and now one of them's not there, and it's just a painful place for them to be, so they just want to be done with it. They want to sell quick and they want to move on with their life. Relocating across the country, they have to do it fast. That's another good one. Really, you know, it could be anything, you know, medical bills, any type of other debt that's not associated with the house, where they have some equity in the house, they want to sell the house quick and use that equity to get out of their other problems. And number three, the house being messed up and the seller being messed up. These two things just kind of go hand in hand. You know, usually we'll see something that the house is messed up and the seller's in a messed up situation. It's very rare that you see a house that's in perfect retail ready shape and then the seller gets themselves into some sort of situation where they need to sell the house quick. And for whatever reason, those two things just always go together. There's always some sort of financial stress or personal situation along with the house being messed up. Now, sometimes you'll come across a rare deal where there is no common motivating factor and the person is just looking for convenience. You know, for whatever reason, some people hate realtors and they don't want to pay a 5% commission to have someone list their house, no matter how nice the house is. And they also don't want to deal with the hassle of selling it for sale by owner. So they'll just call a cash buyer that they find online or through a piece of marketing or whatever. And these people are willing to trade equity for speed and convenience. You know, that's kind of the name of the game when you're buying stuff off market. That's what we're offering the seller, is convenience. We'll come in, we'll pay cash, we'll do it quick, and you can be done with the issue, whatever that issue may be, but the trade-off is that we get it for a good deal. So they are trading equity for what we offer them, speed and convenience. Another common motivator that we see are tired landlords. Now, these are people that on average are more sophisticated than, a typical homeowner that we deal with, just because they are also investors. They own a rental, they're a landlord. But sometimes things go wrong with rentals and the tenants stop paying, the tenants thrash the place. Something like COVID happens where they get really spooked on having a rental because of eviction moratoriums and all of that. So these people we call tired landlords, where they're also just looking for some sort of convenience, and they want to sell their rental, and they don't want to deal with kicking out the tenants, and they don't want to deal with repairing the property, and they would rather just sell it to another investor that will come in and give them a fair offer. It's not going to be top dollar, but they'll get something that they deem as fair. And usually these people have held these properties for 20 or 30 years. So even for us, getting a good deal on the property is actually much, much more than they paid for it 20 years ago. Now, the bottom line with all of this, no matter what the motivating factor is for our sellers, we are solving problems for the seller. Now, the problem could be anything, but it's your job when you're buying something off market to find out what that actual problem is, what the actual motivation is, and solve that problem for the seller. Obviously they want to sell their house or they wouldn't have come to you, but there's always something more than that going on in the background, and that's the problem that they need to solve. So as an acquisition manager, or if you're just starting out wholesaling and you're the only one and you're on the phones, that's kind of your job to uncover this motivation and solve the seller's problem for them in the form of buying their house. Like I said earlier, sometimes the actual house is the problem, like a tired landlord that has squatters in the property or something like that. But more often than not, the house isn't the actual problem. The house is just the means for them to solve the problem, because the house is kind of a savings account for them. They have a bunch of money tied up into it. As soon as they sell it, they have access to these funds, and then they can go solve their other problem with those funds. Now, of course, the next question that probably comes up is, how do we find these people that I just talked about? So that list that I just gave you, that's kind of your target demographic when you're marketing to these people. So whether you want to go after lists of people who have just been divorced, or people who have just inherited properties that they might not want, they'd rather have the cash, or tired landlords, anything like that, those are the people that we're marketing to, because we know that they're much more likely to sell their house at a discount, and those are deals that we're going to be able to buy, rather than a normal seller where they don't really have any extra motivation besides they want to sell their house. Those people are much better off listing their house and getting top dollar for it on the market. And that kind of brings me into my next point. I know that talking about people who are in need or in some messed up situation, or their house is really messed up, can kind of come off as a shark or really greedy, or we're taking advantage of people and stuff like that. But one of the core values we have at the company is always do what's right for the seller. So we produce all of this marketing, and a lot of the leads that we get are retail, what we call retail leads. And these are houses that are in good shape. They're much better off as a listing. Those are deals that we don't even try to buy, because the seller isn't motivated, and our services that we offer, the speed, the convenience, the as is, the cash deal, all that stuff, it doesn't really make a difference to them. Their motivating factors are they want to sell the house and they want to get top dollar for selling the house. That's a listing all day long. So that kind of goes back to the original question. Do we try to convince these people to sell the house? No, we don't. We kind of steer them into listing it with an agent. I'll still make them an offer, but it's kind of a soft offer. It's like, hey, I ran the numbers on this. We would be right around this number, and usually they have given me a price that's much higher than that on what they want for it. Sounds like it's not going to be a great fit for you, but I really do think that listing this property would be a better option for you, because yes, you have to go through all this stuff, making some repairs, open houses, taking photos, all of that stuff, but you're going to be able to net much more money on market with an agent, even after you pay the commissions and your half of the closing costs and all that type of stuff. So we always act with integrity. We always do what's right for the seller. And it's just important to have those relationships with agents if you're not an agent yourself, so that you can hand them some retail leads, and then hopefully they can hand you some flip leads in the future. So that about wraps it up for this episode. Make sure to drop a comment down below with any questions you have about real estate or real estate investing, so we can get it answered on some of the future question of the week episodes. Make sure to smash that like button, and make sure to subscribe if you're new here. stay up to date with all the content that we'll be dropping. We're going at least once a week, so excited to see the channel growing and keep providing value for you guys. So thanks for watching, and we'll see you on the next episode.